and another stock is about to bite the dust. In this video, we're going to talk about one stock that is about to drop 144 bucks in the next 3 weeks, guys. In the last video, we predicted a drop in the shares of AutoZone from 1,150 bucks to 1,065. They did drop to a low of 1,073 within 48 hours. The chart setup is very similar, and as you can see, we're recommended shorting it right here around 1150, 1160 area, represented by this orange dot. Within a couple of days, the shares were trading down very close to our target price right here on significant volume. Now, similar conditions are revealed in this stock right here, which is about to drop from 840 bucks to 699. Now, notice the time frame on this trade is very much different from the time frame on the AZO trade, so don't expect this one to drop $144 tomorrow. Just think of this as a series of drops, pops, drops, bounces, drops. Bounces, okay? So overall, we're compiling these slides on October 1st. I'm actually recording this early morning. It's about 5 a.m. on October 2nd. This trade was actually delivered to our members, our VIP subscribers, as an alert yesterday when the stock was trading between the area of 840 and 850 yesterday. Since then, it has not come down that much at all, so there's still plenty of opportunity to actually execute this trade today on October the 2nd when the market opens. Now, one thing to consider is the fact that, man, Jim Cramer, I love him for the dedication and studying the markets for many years. But one thing Jim is just not really good at is reading charts. He can't read a chart worth a damn thing. So Jim Cramer actually yesterday on October 1st goes out and says, hey, Chipotle goes to $1,000. And we're saying Jim Cramer is dead wrong on this one, guys, because it's going to $6.99. So the stock we're going to take a closer look at is Chipotle Mexican Grill. Now, one thing that we did recommend our members was shorting this thing at a level of 850 when this black candle was created, and so with some phenomenal gains were made because the next day the stock dropped to a level of just under 800. This time around, we're noticing a definite top being formed in the shares of CMG. And therefore, we think the drop is going to be much rather substantial, getting close to this orange line right here, all the way to about 699. We don't think it's going to touch this 681 level, but we do think it's going to play with this level about 700. Now, you're going to think like, dude, this is a huge drop. What actually makes you think that? Guys, this is a very, very well-defined top. This is a multi-top formation, triple top to be exact, with a definite RSI divergence as the stock keeps working its way, trying to break above that 850 level. The RSI keeps going lower and lower. Notably, every time it does try to rebound, it does rebound on much smaller volume, which is definitely negative for this thing. Now, there's plenty of people that have not yet sold, which leads us to believe there's going to be more days kind of like this one with a big red candle on much more substantial volume right here. So, definite probability of a substantial drop here. Again, just don't expect it to drop 140 bucks over the course of one day. Think of it as a series of drops and bounces, ultimately ending up within 3 weeks to drop of 144 bucks. If we take a look closely at the weekly chart, very nice defined top here as well, presented by a bunch of bearish reversal candles. Confirmation on the RSI diverged as well. Definite cross right here in the MACD, which points that the time of the drop is near. It's about to go down, guys. It's about to happen. So some of the other things to consider is the fact that the entire sector is working its way lower as well, and rather rapidly in a substantial volume. So one thing to look at is on a particular stock, but when the entire sector screams that a big drop is about to take place, that makes your trade so much more probable. The probability of nailing your trade goes up substantially when you're not just calculating the drop in a particular stock, but rather the drop in the entire sector. And this is exactly what we got going on. All-time favorite, McDonald's, been up from, last couple of years from 140s all the way to the 220 area. But now that it is near all-time highs right here, we got on the weekly chart a very well-defined head and shoulder formation. Okay, and notice the acceleration on the sell days, which correspond to some of these red candles. There's just too much red right here at the top that coincides with this huge sell volume or increase in the sell volume and a crossover on the MACD. Guys, this is very serious because it's also confirmed on the daily chart of McDonald's, guys. It's a very nice head and shoulder formation as well. Now, notably, when you actually zoom in, right, instead of looking at the weekly chart, take a closer look here on the daily. Look at this volume, the sell volume. I mean, very rare do you have a situation where you have three huge red candles on the volume right here. Sometimes you'll get one, you'll get two, but three. People are getting out of this stock. So you got Chipotle showing signs of the top, which coincides simultaneously with McDonald's showing signs of the top right here, guys. It's also confirmed, again, on multiple time frame charts that, RSI divergence is very much present across different time frames, which is very important. And just as we think, or it appears to be, that the MACD will finally catch a break and do a bullish crossover, it has a failed breakdown. It's about to reverse and move lower again. So beautiful chart on McDonald's. Importantly, to notice that now, just like the shares of Amazon, and then Amazon clearly is not a restaurant stock, but the reason I'm bringing it up in the prior few videos I've disclosed to our 13 Market Move members is the fact that the longer something stays under the blue line, the likelihood, the probability the next move is actually going to be lower, because the institutions typically is portrayed right here. For example, it drops and you see how quickly it bounces. So when something bounces, institutions are actually liking to buy stocks just under the blue level and try to bounce their favorite stocks above that level. Now in this case, they're not having any success with that. So every time you get to a blue line, you see a drop. So use any area between 209 and 213 in McDonald's as your entry on the put side, targeting a level of 196. Now, that is not our favorite trade. Again, this video is mainly focused on CMG, and we'll disclose at the end of the video why we think this is actually the best play among all the restaurant stocks. Now, if we take a look closer, here's another favorite in the restaurant sector, which is Shake Shack. Same pattern, guys. Same pattern. You got a head and shoulder pattern developing here. Okay, you got the crossover already has taken place right here. You've got RSI is just giving in rapidly, right? And you've got, if you take a look at some other time frames on Shake Shack, you will see this death hook actually developing on the weekly chart. So this is the pre-existing condition to further drop. Now, we're not saying Shake Shack is going to drop, let's say, all the way back to 64, but there's a nice drop cooking in the shares of Shake Shack right here. So maybe a drop from 93 to 80, possibly touching 77, 75 areas. So there's definitely some room there. Now, this has been also an all-time favorite among institutional investors, but this one is just, from the standpoint of trading options, may not represent as good of a trade as CMG. Nonetheless, we're expecting this one to drop and bite the dust as well. Domino's Pizza, similar conditions. Look at where the stock is trading. It's under the blue line. Remember what I just mentioned, the longer something is under the blue line, the higher the probability will actually, the next move will be lower, not higher. So anytime it actually comes close and it looks like, oh yeah, it's about to rebound, use this opportunity to actually short the stock. So in this situation, we've got also a very nicely defined triple top. Remember, I was just showing you the triple top in Chipotle. I just shown you top information in McDonald's, guys. Similar thing, pretty much almost identical right here in the shares of Domino's Pizza. And the longer it stays under the blue, the more developed this death hook is going to become. Use your imagination. This blue line is going to come closer to the orange line. Ultimately, they will intersect. We'll see Domino's Pizza under 200 bucks. 200 has been kind of a strong level of support for a long time, but we think it could actually break that over the course of the next 30 days. And if you look at a smaller time frame, the condition is the same in Domino's Pizza. Actually, this one is pointing to a much faster deteriorating chart. In this case, the death cross has already taken place on the daily chart. And now that the stock is trying to bounce, this level right here, 245 to 50, maybe actually a great level to come in and short this one here, as well as it coincides with a MACD crossover, bearish crossover right here, guys. So the key takeaways of this. This is a pretty easy play. I like the fact that Jim Cramer is bullish. I like the fact that a lot of people are bullish on this thing just as it forms the top. And so these positive conditions that they're talking about in the news is actually a reason to short this thing, because when pretty much everybody is bullish on a thing, initially that is bullish. But when everybody is bullish on a thing, when it went up from 250 bucks to 850, that is no longer a reason to be bullish, but rather a time to be expecting the TRO. And clearly the charts do point to a trend reversal opportunity here, guys. We'll nail this trade just a couple of weeks ago when it dropped from 850 to a 780, 790 area. We think it's about to do it again. Expecting a decent drop today, just to kick the party off here, maybe $20, $30 drop today on October the 2nd. So it is institutions' favorite stock in the restaurant sector. It's also the highest priced, not in terms of the price, but in terms of the ratios that institutional investors like to calculate. We personally don't care about the PE ratios, but institutional investors do. So when you look at the situation, when overall we're expecting a decline in the market overall, they are going to be liquidating the stocks that have the highest PE ratios in their portfolios. So currently it trades at crazy PE ratios. That's going to be the first one to live their portfolio. Also, they are going to be taking profits and locking in some gains on this one, as we already seen this behavior materialize over the course of the last couple of weeks. So expect more profit taking, considering this one right now does have the best charts. The best chart among all the other charts we're just taking a look at. This chart is destined to deteriorate much faster than the other charts. You see, this one is still at the very top, and this one is going to have quite a bit more room to drop. In the case of McDonald's, we calculated a drop of maybe 7-8%. In case of CMG, we're looking at a potential drop about 16-17%, which would put us at an area about $6.99, guys. So it's this chart is destined to deteriorate very, very rapidly. So consider that this is a beautiful opportunity to short the top. And this is exactly where you want to short the stocks, guys. You want to short them at the top. So with that said, guys, if you're trying to understand more about charts, how to utilize them in your daily trading, your swing trading, guys, we have a special course, Charts Divergences, which allows you to point out these key pivotal reversals. See, most of the courses out there, they talk about the trend is your friend, all this bullshit that, you know, can make you a little bit of money. But if you're really looking for a breakthrough in your account, if you're really trying to nail some killer trades out there, you've got to understand when to be a bear when everybody else is bullish. And this is the case right now with CMG. So with that said, we've got some more cool trades coming up. Guys, let's roll. Today's going to be an exciting day. Let's make some money. And by the way, guys, if you have not heard about the new course that just came out, for those of you that have been asking for a inexpensive course, this one is high-packed with 233 trading secrets. So regardless whether you're new, whether you're a seasoned trader who's been trading for 30 years, guys, in this 233 trading secrets, I reveal some stuff that you will never ever hear anywhere else, that you will never ever find anywhere else, because this is just some trading secrets I have discovered on my own, not taking other courses, not taking other stuff. I share some secrets that from our 13 markets move formula, some really good tips for those of you that are trying to move to the next level when it comes to your day trading or swing trading activities. So definitely take advantage of it. It is available now, tradingoptionslive.com. Just go there, click the 233 trading secrets. Take advantage of it, because as we put even more content in that course, the prices will go up as they typically do on all of our stuff. So just get ready, take advantage of this promotional offer right now. Guys, with that said, make a bunch of money. I'll catch you on the next trade soon.